Welcome to the Practicing Accountant Podcast, your go-to resource for transforming your accounting practice. This podcast is for accountants ready to take control of their business and build their ideal practice by mastering the essentials, setting the right prices, defining a powerful niche, and selling with ease. We'll dive into strategies that boost profits, attract your ideal clients, elevate your services, and help you choose the most effective pricing models. We are champions for efficiency, value, and intentionality, and adversaries of people-pleasing, bad clients, and complacency. We provide actionable strategies to help you break the hamster wheel of typical accounting work. The mission of the Practicing Accountant Podcast is simple: to enhance your experience as an entrepreneurial accountant and help you turn neglected practices into a thriving business. So, if you're ready to level up your practice, this podcast is for you. Tune in and let's get to work. I'm overwhelmed, I think, with the opportunity of using better pricing models and strategy in accounting firms. And, part of it being, there's a lot of, I think, value that we leave on the table when we price services in accounting firms. I think we do ourselves a disservice when we try to beat the guy down the street with a lower fee or a lower per hour rate. And I think we're working our asses off with a lot of expertise for very little return as accountants. And so that's what this is all about, or part of it at least. But there's two things that I really wanted to talk about. AI, artificial intelligence, is here. We're using it now and using ChatGPT to help us ask pricing questions and to navigate objections from customers, and coming up with good ways to pitch our one-pager and our services. But it's very handy right now, and it's going to get handier real soon. And I've been exposed here over the last couple of months to a version of AI that I think we'd all heard about and imagined happening, but you kind of felt that it's, still a ways off. And the stuff that I've seen over the last couple of months has done two things: caused some fear and caused some excitement. And the excitement is for all the work we're not going to have to do in accounting to be getting our job done and to be serving clients. There's just so much stuff that the AI is going to do. I need to speak specifically to AI agents, which, if you don't know what an AI agent is, it's what drives your Tesla, if you have one. It's not a chatbot necessarily, although a chatbot is an AI agent. A chatbot is just meant to have a conversation with you. An AI agent is meant to solve problems and do tasks for you. It's like having an extra staff on the payroll. It's like having an extra body in the office to do things that you would prefer not to have to do, like month-end close, like pulling down bank recs, like comparing, doing cash reconciliations off of those statements, reconciling AP, AR, downloading, moving invoices, preparing the financials, looking for mistakes, identifying variances, doing things that you currently do maybe with software or maybe manually, but a lot of it's going to be manually, and those agents do it for you. That technology is here today, like it's here right now. It just hasn't been spread out into the world. And there's a number of companies right now that are building it, using it. There's Thomson Reuters just put $150 million fund together that they're going to put into technology of this kind. There are firms right now talking to the big ones, and you have to think about it from the AI agents perspective. Like, they're going after the big fish first, right? Like, they want to get in with the top 10 firms or the top 100 firms and create big contracts for their AI agents to go and do this work, which is great. But there's, 15, 20,000 solo or sole owner home office SOHOs that are kind of in the back of the line. But it's coming. So that's the exciting part. The fear comes from all of the firms who currently either use an hourly billing model or
Mhm.
even a fixed price, fixed fee model. Both
Or
of those, go ahead.
the fear should be there. I
Should
don't
be
know if
right, right. It's not.
right,
It's not. It's something that next season, or I'll deal with it later, or it's not here yet, or
yep.
I'm sure it'll work out, whatever. But if you're billing by the hour right now, here's the fear I want to instill. If you're billing by the hour right now, just imagine not being able to bill half of that time because AI has come in and made half of your work instantly done. Now I'm using an extreme here, but even a third. There's one company that boasts they're going to cut bookkeeping services in firms by 30%. So just imagine not being able to bill a third of your time, but still producing the same amount of work.
The
How are
same
you
amount of
going?
output. Yeah.
Same amount of output. Yes, thanks. How are you going to be able to still bill the amount that you're used to billing for the work you're doing?
Oh, but
The
Doug, we can just raise our hourly.
right. And and there's some truth to that. There is some truth to having a value-based hour that I can get my head around, but that's not where firms are at right now. They're billing whatever they think the market will bear per hour and doing the work at that hourly rate, however long it takes.
And
And they're
let's just
getting
sorry to interrupt you. Let's just
mm,
debunk that right now.
mm,
Like if you increase your hourly rate because you become more efficient, you're not even actually hourly billing.
mm,
You're already doing some sort of value billing
mm,
because you have a target that you're trying to reach because you know that that client sees enough value to pay the certain price that is already not correlated with the hours that you put in. So you're not
right,
even truly hourly billing.
right.
So like,
Sure, right. My fear is that we're not going to have the hours to bill anymore.
mm-hmm.
And unless we move either into, a debunked value-based hour or into more of a value-based pricing, there's going to be a lot of firms that struggle to maintain their income. And what they're going to do is they're going to take on more clients to fill in that gap that those hours they no longer have. And they're going to, basically double the amount of work they're doing or number of clients they're working with and hopefully being able to sustain the same fee. But you and I both know that it's not a one in one out kind of equivalent. Like when you take on a new relationship, there's a lot of extra time that goes into managing that relationship and making sure that they're served. And I fear for accountants that rely on the hourly billing rate model in a world where AI is supporting all of their efforts.
Yep.
So, there's in the past, the reason for moving to value-based pricing was because you deserve to be paid for the value that you deliver, not the tasks that you perform, the value that you deliver. Fixed fee is based on tasks. It's fixed on a rate that you decide something is worth and charge for it that usually is equivalent to some amount of work to do it.
Yep.
And if you're inefficient and if you run over time, it's fixed rate. It's your problem. Value based is not based on the time you spend or the tasks you do it on the value you deliver. So with or without AI, the value is the same,
Mm-hmm.
but the
Yep.
time that it takes to do it is a lot less with that AI. And so why wouldn't you adopt this value based pricing model that allows you to charge for the value you do, regardless of how long it takes for you to do it? And so
I
that argument, that idea, that concept is new of how much AI is going to afford the ability to charge value based versus any other model.
well, I think this similar thing happened when tax software became prevalent and
Sure,
standardized. Um,
sure.
if you were filling out 1040s by hand, that's going to take a long time compared to, Lacert or, pick your poison. Um, so they probably dealt with a similar thing, but the the output, as you said, is the same. The outcome for the client is the same, and you should charge accordingly.
Mhm. Yeah. And so the whole concept of value-based pricing is not new. It's been around a long time. Alan Weiss and Ron Baker and some of the greats, were the grandfathers of the concept, and Alan was more holistic around other professional services, and Ron Baker was honed in on accounting. And he's the guy that says that his legacy will be the death of the billable hour.
Yep.
and kudos to
Mm,
him for that effort. But even he, on the precipice of really pushing for this concept of value-based pricing, didn't anticipate the disruption that AI is going to have. That
mhm.
an AI agent is going to do so much of the work that you currently are billing to a client, and no longer will have that time to bill.
Right.
And so taking this leap into value-based pricing now is more important than ever, because if you wait, um, it's going to show up. You're going to have an agent in your office that sits on a computer and does so much of the work you normally did. Um, and then you're going to figure it out, with your clients, or you can start getting them into an understanding of how you price your work, with value rather than time, and not focused on tasks, but focused on the outcome to the client. Um, so there's an opportunity now. But at the same time, value-based pricing remains elusive. It remains a concept that people talk about and they say they do, and they believe maybe they do. But there's no science behind it. They just, pick a number and let's see if the client pays. So you and I put together a white paper on the
Mm.
on the topic, chasing this value priced ghost, and actually coming up with some ways to actually calculate it. Now, it's not perfect because there's no real right way to calculate value-based pricing, but
Right. Because
you,
it's half art,
yeah, it's
half
totally
art,
art.
half science.
Yeah, it's like looking at a painting and saying one's right and the other's wrong. Like,
Right. Right.
it is an art form and how you do it. But we at least created some broad strokes on how one would conceptualize value-based pricing. And that's just a free thing that we put together. And we put it together because I was tired of hearing people talk about value-based pricing, but no one was giving an answer as to how to calculate it. No one was
Yeah.
saying, here's how you do it. And I think it just became kind of almost a cliche of how you're supposed to be versus how you are. And so anytime you price something more than your normal hourly rate, you'd call it
It's value.
value-based pricing because there's
Yeah.
a markup or a margin on top of it that you can't justify with time.
Right.
Um, which, I mean, there's some value to that too. But more than ever, it's a great time to be in value-based pricing. So how do we implement that? Well, I would bet, that anyone listening to this is at least going to have one more potential client show up either in an email or a phone call or a referral or I'm in a tight spot that will really need your services
Mhm.
still this season. And if we listen to the people pleaser, which as we talk here often, we tend to do, we might just go ahead and say, yeah, sure, no, we can get that done. We'll figure it out. That's my favorite phrase, right? We'll figure it out. And you might take on that work at either your normal rates or maybe you'll gouge them a little bit and add some markup to it. But I would encourage you and challenge you for the next client, if you bring in another client this season, to charge them using value-based pricing and use our tool to kind of come up with a concept of what that means for you based on whatever services you provide, whether it be tax or bookkeeping or virtual CFO or cash management or whatever it is. But just try a model that is not tied to the time you're going to spend doing the work, but the value that that client will receive. It is likely going to be more than you normally charge. It should be, as we might expect it. We absolutely expect it to be, and you don't run a lot of risk. I mean, if the client says no, it's too much money, okay, see ya.
Yep.
I mean, I've
It's a
got no
great
relationship with you,
practice
and
run right now.
and I'm already full, and all I'm doing is just make myself work an extra couple hours on the weekends for you. So I'm okay if you say no to this price. And at the same time, it's not some bullshit number that you just came up with that's really high, but it's actually based in some science. Like, what is the value of this? What will they receive from this? Well, they're going to get great advice. They're going to save some money. They're going to have better books. They're going to have better decisions they can make from those books. They're going to have a better chance of achieving their goals. They're going to have a better, whatever it might be. There's value there. There's value there. Maybe you help them, um, save a certain amount of money annually by making better decisions with their financials, say $5,000. And normally you would charge, 3 hours a month, call it, you know, maybe 300, $400 a month. Okay. Um, so maybe my numbers aren't working here, but like, if it's like
Right.
10,000 and you would normally charge 5,000 for it, that $5,000, that's the premium of the value over your time. And you can justify that either by looking at the market to see what someone would normally pay for that, by considering this is more about the value that they're receiving than the tasks you're performing. And then you've got some science as to why that number is what it is. So the client can say, no, I don't want to spend 10,000 bucks. It's not worth it to me. Well, you can say, all right, that's fine. And good luck. See you later.
Right.
Move
Right.
on. But we
Well,
have to
you
start
you
getting into that mindset.
you could also charge a premium just based on them being in a tight spot, just like Uber
There's
does.
value to that.
Yeah, there's value to that sort of surge pricing model where if they're having a hard time finding a CPA or a tax preparer or a bookkeeper right now, that means that you're in high demand, and that means that your price should go up. That's microeconomics 101.
Sure. I mean, you walk out of the football statement after the stadium after the game, and there's Ubers lined up out there, and that's really nice. There's some value
Yep,
to that, and you might be willing to pay twice as much as you normally charge, so that you can get home and back to your family, or just safe in your living room.
you bet.
Um, but yeah, at this point in the season, you are in high demand. There is a value to being available right now, and willing to help someone.
Hmm.
But well, whatever the reason, whatever you describe that benefit that you deliver is, lean into that when you price this season rather than the hour or just a small markup. Like, bill your value rather than the tasks and the hours that you spend, because the future is coming, AI is coming, and this is the best way to be prepared for it. Another thing I wanted to make sure that we talked about in this session was scope creep and change orders. So whether you're on fixed fee or, with hourly billing, it usually doesn't matter as long as the client's understanding that whatever time you spend is going to be billed. Fixed fee, especially, because I think that's a pretty popular model right now. I think a lot of scope creep shows up in fixed fee. And, client says, I want my taxes. You say, sure. And then they say, oh, and by the way, there was this other thing that happened. I forgot to tell you about it. And you say, all right, fine. And you do the work and you charge whatever you charged. Well, back at that moment when the client says, oh, and by the way, there's this thing that happened, or this other project, or this other entity, that moment right there is critical. That's the scope moment. And that's when you say, client, I would love to do that other entity. I would love to do that additional work, but it is going to affect the fixed fee that I quoted. And instead of it being this, it's going to be that. Are you okay with that? Give the client a chance to say yes or no in that moment, and you are more likely going to get that change order than you are on the back end when you come to them and say, oh, it took longer than we thought, and it's actually an extra 500 bucks, and here's your bill.
That is
Client
the
gets,
hardest. That I love the term you just picked, the scope moment.
mhm,
That is the hardest moment for a lot of accountants that have the people pleasing attribute,
right. Yeah.
because you are already working with this client. You don't want to piss them off right in the middle of an engagement.
Mm,
And so you just say, yep,
okay.
that's fine. We'll take care of
So,
it. But then you end
yeah,
up eating it on that
totally.
engagement.
I had a client that I'd used to call, and I'll make up a name. Let's say it's Mr. Jackson. And I'd call him, it usually the call would come in April, and I'd say, Mr. Jackson. They say, ah, shit, Doug. All right, how much? I was like, I know. We went over, and you sold this stuff, and you did this and you did that. And he's like, and I go, well, we'd like to collect some of that. And he'd be like, oh, what are you asking for, Doug? And I'd say, well, we spent an extra 15 grand. How about we split it with you? And Mr. Jackson usually was good with that. He'd be like, all right, fine, we'll split it. I'll pay half and you guys eat half. I'd be like, okay, thank you very much. And then I'd hang up the phone. And I'd be all excited. I'd be like, woohoo, I got an extra 7,500 bucks. And that's better than zero for sure. But
Right.
I still left 7,500 bucks on the table. Now, if I had rewound the tape and gone back to that scope moment when I found out, or I realized, or they asked for whatever it was, to say, whoa, hey, that's awesome. Love to do this work for you. We're working together. Let's do this. However, it is going to affect the fee that we charge by whatever number you come up with,
Hmm.
and get their permission. And I think you and I have used the example or the analogy of like going to the mechanic with your car, right? Like, you take your car in, you leave it with them for a little bit of time, and then what happens? get a phone call and they say, hey, I took a look. It's going to take this, this, and this, and this, and this. This is how much it's going to cost. And you go, whoa, 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 I don't need all that done. I just need the thing fixed. And they're like, okay, is that all you want? They're like, yes. And then after working on it, if something happens, they call me and they say, oh, we got to move this and we got to move that. Are you okay with us doing that? That's what we got to do. And you're like, I guess so. We got to do it. You got to do it. But they don't wait until I show up to their garage a week later and say, okay, here's all the things we did.
Right.
And here's the things you thought we were going to do, or that we talked about we were going to do. And here's the things we did. And here's the extra bill. Like that doesn't go very well.
No, that doesn't work.
So, so I bring this up now in this point in season to say you're going to have scope, you're going to have scope moments. And when you have an opportunity to do additional work for a client, this is not about saying no. This is about giving them the opportunity to pay for it by asking and saying, there's additional work here, client. I'd love to do it for you, but I need your permission before I do so because it's going to cost extra. And they might
And
bitch and they might moan in that moment, but it is what it is.
yeah, and any other business, what is fascinating about accounting, any other business, law firms, mechanics, they're not going to eat that
Hmm.
like accountants
No,
do. They're
they
gonna
have nowhere to
they're
put
gonna
it.
charge you for it. Yeah,
No,
yeah,
your mechanic isn't tracking realization.
right.
You know, they're not looking to see whether they got their billable hour out of you or not. Like that's done. Like they might have an ineffective installation of something, but you're still paying for it. And they might look at it like a brand new mechanic and say, okay, we're going to just eat half of his time and only bill this much for our client. I get that, but they're not tracking realization and whether or not they billed for the work they did.
Right.
But it's a great point you make. So the scope creep, it's a great time of the season to be paying attention to that. It's a great time to be trying a new pricing model with clients here in this season. Um, and then I think just again, there's some work that you and I are leaning into doing with our audiences, and that's just being prepared for the AI and what's coming. There's no question it's coming. If I was on the fence, 3 months ago, I'm no longer on the fence as to what this is going to do for the industry. It may take a little bit longer for it to hit the SOHOs, the single owners home office um, accountants, but bookkeeping is going to completely change. How you close the books each month is going to be so much faster, and that time, unless you find either value-based pricing or more work and relationships to manage, you're going to find yourself with less revenue, which means you need to get better at getting new clients or start value-based pricing now so that when it comes, the only thing you benefit from is more time.
Yep. Yep. And I
Same.
think sorry, the accountants are meticulous when it comes to expenses. Why are they so sloppy when it comes to pricing? You would never allow that unintentionality to come through in your expense side. So why do you allow it to come through on the pricing side? And now's a great time to just get intentional about it and start thinking about that. Now
We'll
you have
start
to.
playing
I
with
mean,
it.
yeah,
It's a great time to be playing because it's you're likely full-ish. You're probably not scrambling to find clients at the moment. I hope you're not. And it's okay to test something out. And my approach when I work with an individual firm or a small firm is let's just get some tests. Let's run some experiments. Let's find a potential client. Let's try a new model. Let's see how it goes. You can still track on the back end, like, okay, if I had done this on an hourly basis versus this value-based pricing model, how do they compare? And you might find for whatever reason that you didn't capture the value and it didn't work out for you. Or you could find that it doesn't matter how many hours you spend, you do better with that value-based pricing model than you did with the traditional model. But there's like this cloud of I don't even know what I want to call it. Misperception around value-based pricing. And I just think a lot of people are talking about it. A lot of people are saying they're doing it. And I really find it hard to believe that as many are doing it as they say they are. And even we'll get comments on this, and we've gotten comments on other things about how folks are using value-based pricing. And it doesn't feel right to me. It just feels like there's a lot of fixed fee pricing going on that people are calling value-based pricing. But fixed fee pricing is still based on time and what you do. not
Right,
what
right.
you deliver.
It's still that fixed fee is usually generated from history of hourly billing. So they have an idea of what it costs them to do,
Mhm.
and then they just throw a fixed fee at it that is hopefully a good margin, a decent
Right.
margin. But you can increase those margins substantially with value-based pricing.
Mhm.
So,
Yeah. You know where it is showing up most, I think, where value-based pricing actually is getting some good traction is on the CFO services. So
mhm.
like in the cases I've seen in some of the conversations I had, some of the numbers that individuals Sohos are charging their clients for virtual CFO or part-time CFO services is value-based pricing. You know, it's a couple hours a month and $3,000-4,000 for that. So it's definitely showing up there more than bookkeeping, definitely more than tax planning, definitely more than cash management or budgeting, which sometimes people call that CFO services too. Um,
Yep.
but it's just an opportunity right now. And so I guess if there was any takeaways from this little conversation of ours, try a new pricing model with a new client because I still believe you're going to see some. Um, Make sure you have that scope moment where you talk to your client and get approval with a price of what it is they're asking you to do, more than what you had planned to do, and then start paying attention to AI agents. You and I will keep this audience informed as best we can as things progress, but it's here. It's just going to take a little bit longer to get to the Sohos, but Intuit, Sage, all the big guys, Thomson Reuters, they're all working on it.
Yep.
So it's going to be here.
You bet they are. Awesome,
That's
man.
all. That's why I wanted to get off my chest today.
Cool. Thanks, Doug.
Of course. Cheers.